When are you guys planning to move out? That's the sometimes silent question posed by more and more parents as their adult children stay longer in the family home. The phenomenon is having its impact on the housing market, according to the latest profile of the sector by real estate agent Savills. And Director of Research John McCartney joins us now in studio. John, I don't know what age your kids are, but mine are getting hardy. What impact is this having on the market, and a complex market?
Yeah, well, it is a complex market, Vincent. Last year, there was about 51,000 housing transactions in Ireland altogether. And official statistics tell us that about 47% of those, that is 24,000 approximately, housing transactions were people moving within the market. Now, unfortunately, the official statistics don't break that down into the numbers that are moving up, trading up, and the numbers that are downsizing. So we've looked at our own statistics to try and get a handle on that. And it's quite interesting. What we discovered was, firstly, the number of people trading up outnumbers the number of people trading down by a ratio of 2 to 1. So there's far more people trading up than trading down.
Buying a bigger house than they're in currently.
Indeed. And equally, the number of people trading down has diminished steadily since 2014. And we're speculating that part of the reason for this is that older couples who are perceived to be empty nesters actually in many cases don't have an empty nest at all. They have these boomerang kids that have come back or never left in the first place. And the reason they can't downsize is they need the rooms.
And of course, some of the reason why those older kids may not have left the nest is because they can't afford to, because of rent or the cost of for first-time buyers.
Well, absolutely. We have seen that rents are now above where they were back in 2007 during the boom. And likewise, of course, we know that house prices are nearly 50% up on where they were at let's say, bottom dead centre back in 2013. So it has become very difficult for young people to get either rented accommodation or to buy their own properties, and that's what's causing this problem. And interestingly, we see it in the Census statistics that were released earlier this week. For example, we see that the number of couples living with children over the age of 20 has increased. Now, it's only increased by about 4% since 2011, but when you consider there are 87,000 fewer people in their 20s today than there were back in 2011, I think it's a significant shift, and I think it does tend to triangulate the point that young adults are increasingly having to stay at home.
And the numbers of those, from your own stats, the numbers of those trading down, moving to a smaller residence, is falling, even though the number of people hitting that kind of age cohort is growing, obviously, and also the differential in the price between what they sell and what they buy is quite significant. It's nearly, over €350,000?
Yeah, indeed. Our statistics indicate that the average price of traders down selling in the market is about €812,000, whereas the average price of these people when they buy back into the market is about €466. So that's a gap of €345,000.
Could it be that people are waiting for that gap to actually stretch further as house prices go up?
Well, I think what might be happening also is people might be just doing the arithmetic. If, house prices increase by 10% in the year, which I think is realistic for 2017, then obviously you stand to benefit more from that if you own a house that's valued at 800,000 rather than a house that's valued at 450,000. So I think that could be part of what's going on as well.
Now, fewer people trading down, as you say, that I suppose tightens the supply generally in the housing market, particularly for second-hand houses, which of course puts additional focus on the need, as we all know, for more new houses. What's your view on that now? Do you think, nearly 6 months on from the central bank loosening to some degree its mortgage constraints, the tax support coming in from the government, is it beginning to cause additional supply there?
I think it is, yeah. I mean, certainly our land teams that are selling sites to developers and our new homes teams that are working with developers all the time, they are experiencing, I think, a sea change in developers' attitudes. They're saying that developers now have the confidence that if they go ahead and build housing estates, that they will be able to sell them at a price point that makes it profitable for them to do so. So that is I think the shifting attitude among the developers, and we see it in the statistics. There was a significant increase in housing commencements. They're up by 2/3 year on year in Q4 2016 compared with Q4 2015. So
we obviously need that trend to accelerate.
We need that trend to accelerate, and I think the critical thing is that we have to keep a handle on construction costs, because obviously as house prices go up, that creates a profit margin for developers, and they'll pile in and start building, and that's what we want. What we don't want to happen is for that margin to be eroded from the bottom up by increased development costs.
Now, a lot of commentators suggesting that property investors, those buying homes, apartments for investment purposes, is declining rapidly. You seem to be suggesting there's still a lot of investors out there, but that many of them are actually buying with a long-term view to their own living arrangements or those of their kids.
Yeah, well, absolutely. Investors, according to official statistics, accounted for about 1/3 of housing transactions last year. And is it any surprise? Because notwithstanding rent controls and, of course, the additional regulatory burden that now faces landlords, the fact of the matter is that you can get a yield of 6.5% on a residential property, and all you're going to get when you put your money in the bank is 1%. So certainly for cash investors, we're still seeing a lot of those coming into the market. Now, what is interesting is we're beginning to see these sort of dual strategies where investors are looking at it, partly as a financial arrangement. You know, they want to get the benefit of the investment return, but equally they're blending that objective with their own accommodation needs or the needs of their families. So they're buying properties that they can downsize into eventually themselves, or that they can use for their kids when they come of age.
Very briefly, John, more first-time buyers in Dublin than elsewhere, but that could be just there's more people in that age cohort, 20s and 30s, in the city. Yeah,
that's true. As I said earlier, the number of people in their 20s has fallen quite dramatically in recent years. That's going to continue until about 2025. So that's a headwind for the first-time buyer market, but it's a much less pronounced trend in Dublin than elsewhere.
John McCartney of Savills, thanks indeed for joining us, and get the big stick out on those adult kids. Coming up, David Bergen of